Hello traders, it is Sunday morning, February 4th, and we have a new market high. Before we get started today, let's take a look at my last pick, RTX. That's a pick that I highlighted in the live event on Wednesday. I hope you've been able to attend the live events. If not, please make sure to watch those recordings because we're answering your questions. Chances are you might have those same questions. RTX looked really good. I like this nice gap higher post earnings. The stock preserves all of these gains and it's staying above AVWAP-E. It is also in this longer term horizontal gap. It's above all the major moving averages, and you can see how the stock is continuing to grind higher. We can go into a 30-minute chart, and the Wednesday live event was in here, so you can see the stock is up maybe $1 or so, but it's a nice steady grinder at this stage. NFLX was the stock that I highlighted a week ago, and what I'd mentioned to you was I loved this breakout right here and the fact that the stock has been compressing. These stocks need time to digest these gains. So you're going to see some profit taking. And so asset managers who are looking to reduce their risk exposure in the stock are selling a little bit, but ultimately buyers like the news. And so if we take a look at that D1 chart, this is beautiful stuff. Look at that AVWAP-E hold, and I'd be looking to sell some out of the money bullish put spreads here. Yeah, but Pete, the stock didn't really rally when the market made a new all-time high, so I'm not sure if this looks so good. Listen, folks, it's been able to hold all of these gains. That is a sign that buyers are there. As time elapses, they will get more and more aggressive, and on these breakouts here, you're going to get follow-through. What you do not want to see on these stocks, and this is the reason that we need to give this some time. What you do not want to see is a gap up. The next day you come in, long red bearish engulfing candle, followed by another red candle. That's a sign that this breakout was a head fake. The longer you go without seeing any of those red candles, the longer that compression is, the more it confirms that these gains are legitimate and the more aggressive buyers will eventually get. So this is an opportunity to buy these stocks before they stage that breakout and that next leg higher. It provides a really good entry point. So Netflix, I am expecting it to tread water for a while, maybe another week or so. What can you do? How can you take advantage of this? How will I know, Pete, when it's time? Well, there are a couple things you can do. You can try and sell an out of the money bullish put spread here. And you can also see that this is the market. This is the SPY. We're going to get into this in just a second. You can see how Wednesday we had a fairly big pullback. What did the stock do during that pullback? Nada. Nothing. It held beautifully. Sure, it didn't participate in the rally on Friday, but it's got all of these recent gains that need to be worked off. That supply needs to be worked off. So yeah, I like Netflix. What you can do is you can sell some out of the money bullish put spreads below this gap right here. And that opening price is 537.75. So you can sell a 537.50 bullish put spread. Keying off of that level, you do have AVWAP-E as support. You've also got confirmation that on a market pullback, the stock held pretty well. So let's go in and take a look at some of those spreads. And this is also what I suggested doing. So on any market pullback, and the reason that we haven't been super aggressive this week is because we had major news pending. This was a time to be on the sidelines and to wait and watch how these news events played out. It played out nicely on the upside. So now we also have confidence that the market is there for us. Market first, market first, market first. So let's see if we can get any kind of credit on a February 23rd. So this is 2 weeks out, and we're looking at that 537.50. It's a little far out of the money, but let's see what we can get. So the 37.50s, yeah, I'm not even pulling in that data for the 37.50s on that particular expiration month, so they may not be listed, but I'm showing that spread is 75 cents bid, offered at $1.15 if I go with the 540, 535. So I would like, and perhaps they'll list these options on Monday, but I would like to go 537.50, 535, and I would be looking to do that for a 50-cent credit. And you're only going out a couple of weeks, so your risk exposure is fairly light. Can I go out further in time? Yes, we want to stay as close as possible with these put credit spreads because we want to take advantage of accelerated time premium decay. So can we go out further in time? Yes, we can. Could we go out further out of the money? Yes, we can. So those are options available to us. We can go into the March 1st expiration, take a look there. Again, you've got an extra week of risk exposure, so you should be bringing in a greater credit. And there, if we go 535, let's reset this, we'll go 535, 530. You can see that it's 70 cents bid, offered at $1.20. Yeah, I would do that spread. 535, 530. Expiration is the March 1 expiration cycle. I like it. This stock is going to continue to hold these gains. So let's also take a look at some other stocks. We'll go into market analysis right now because we've got a new all-time high. So let's take a look at how we were positioned, what our thinking was going into the week. We had major releases this week. It was like drinking water from a fire hydrant. We had ADP on Wednesday. Then we had the FOMC on Wednesday. Tuesday night, we had mega cap tech earnings from Microsoft and Google and AMD. So we come in Wednesday morning and there's some nervous jitters ahead of the FOMC statement. And you can see how the market sold off pretty heavily. So what we had been looking at was to take profits Monday and Tuesday. Well, I got to tell you, Wednesday, I was dang happy to see this pullback because I know a lot of you follow my advice. So tiny bodied candles, gradual drift higher, light volume, take profits into these major news events. Let's see how they play out. This price action has been so dang strong, we haven't seen any dips at all. So what we were looking for is a dip that would be brief and shallow. What does that mean? Well, the dip doesn't last more than a week, and the depth of the pullback is maybe to AVWAP-Q, but not even that far. Now, if it took a few weeks to unfold and we were breaking that AVWAP-Q and that horizontal was resistance, now support at about that same level, okay, that tells us that the profit taking is a little bit heavier. That also tells us that any kind of bounce or rebound from that profit taking is going to be more sluggish because there are sellers, and we have proof of that in the price action. But to this point, every little red candle gobbled up, gobbled up, gobbled up. This is very strong price action, and I can give you a litany of reasons why the market won't go any higher, at least according to the headlines and according to most analysts. If I just focus on price action and I don't look at any of the headlines, I'm not going to be obscured by that news. I will have clarity on how I need to trade and what I need to do. And you can see that even though Wednesday we had the FOMC statement and the negative mega cap tech earnings, Thursday the market rallied up and it closed above the open from Wednesday. That was a pretty dang strong showing. So Thursday rolls around and now we are on the eve of another round of mega cap tech earnings. Meta knocked the cover off the ball, screamed higher. Then we had Apple, which was pretty neutral, but Apple was down slightly. Amazon did extremely well. So when we came in Friday morning, we already had indications that the market was going to be gapping higher, and we closed at an all-time high with a very strong day. Let's put that M5 up. And you can see how the entire day we had a very, very strong rally. Get a little bit into price action on Friday here because we had the gap up, and this was beautiful stuff. We had this bullish 1OP cross right here. I'd mentioned to everyone what we want is we want a nice gradual grind higher. So we want to not have any big moves higher. Well, what's wrong with that? If I'm long, I want big moves higher, right? Well, as soon as we had this nice move here, this is all fine. The long green candle holds and the market compresses near the high. So half of this long green candle is preserved. Awesome. We'll continue to hold, hold, hold right near the high of the day, and then buyers eventually get more aggressive. And this move right here was getting ahead of itself. What I wanted was kind of more sideways action, let the VWAP catch up a little bit, and then grind, grind, grind higher. Like about here is where the market would start to gain some traction, and then we would float higher. So take this piece out right here, and this is the ideal pattern, is you just keep inching higher. There's not a lot of selling pressure. As soon as you start getting into a buying climax like this, you run the risk of blam, that long red candle. That throws a cog into everything. So yes, we do recover it, but now you can see that there's definitely some profit taking and some selling pressure. That is a very long red candle. So we gradually start to recover that candle, but we still don't know if this is going to be a double top or not. We get another long red candle. So now you can see how this is gradually eaten away at, and we're back to the high. So the nice steady moves do away with this type of volatility, and it makes it much easier to hold on to our positions because we're not head faked out, we're not shaken out. But as soon as the market gets ahead of itself, you've got to expect that there's going to be some volatility. And so this is where you want to be taking profits in here. Let this stuff play out. And then when the market resumes its rally, you can get long in here. Now you've got a long green candle with a red, almost a bearish engulfing candle. Okay, you're late in the day, had a huge market run. This is where you want to go to the sidelines. So you had a little bit of an opportunity late in the day to catch some of that upward price movement. And again, a lot of this is dependent on the individual stock as well. If the stock is putting in that grind higher that I had mentioned, you can ride it, you can stick with it. On long red candles like this, when the stock is continuing to hold its bid very, very well, well, that tells you this baby is going higher. So let's see if maybe NVIDIA, I know, is very strong Friday. Maybe that's a good example for you to look at. And so here you get a little bit of a pullback, and this bar came in at 1240. So let's take a look at what the stock did at 1240. It's probably right here. So NVIDIA does pull back, and it never quite continues to move higher the rest of the day. Why not? Because it's made such a huge flippin' move already. How much more gas is in that tank? We don't know. So Meta had mentioned that they are going to be doing a lot more with AI. They'll be releasing that news. That's good for these chip makers. So we'll take a look at the overall market and where it sits currently. I hate chasing big moves higher. But if I take a look, not reading any of the news at all, at what we just witnessed this week, we had the dip which lasted one day. And then we already started recovering Thursday, and then Friday, we made a new all-time high. It's kind of a tough juncture for most traders, and I struggle with it as well because the market is pushing higher and higher and higher, and you're thinking, well, I don't want to be the last guy standing when the market rolls over. I don't want to be aggressively getting long here when the market is at a new all-time high and when it's moved so far, so fast. And believe me, asset managers think the same way. Many of them, I believe, are still playing catch up. And so what is going to drive this market higher? What is driving this market higher? Well, in addition to the FOMC, in addition to mega cap tech earnings last week, we also had a big round of economic releases. The jobs report on Friday was gangbuster. 354,000 new jobs created in January. So let's talk a little bit about that number. First of all, the BLS, Bureau of Labor Statistics, the jobs report that comes out on Friday is filled with seasonal adjustments. If you look at January of 2023, we had a similar spike. So that comes into play. We had big upward revisions in December, I believe, to the tune of about 126,000 jobs were added to the December number. The wage component, 0.6% increase. That's problematic. And the market initially did not like the news. We had a hot jobs number. We had a hot wage component. Wages are the largest input cost for companies. It is inflationary. Now, the one thing I haven't heard anyone talk about, and this is something that I had thought about in January, is that a lot of states have raised minimum wage in January. So that, I believe, is what's bearing out in that really hot 0.6% increase. I believe it's temporary. You have a crowd that's always around looking at what the Fed's going to do. Oh, this is such a horrible number because jobs are so strong. That means that the Fed is not going to cut rates. And now you've got a hot wage component that's inflationary. For sure, they're not going to cut rates. Folks, I told you last week, do not expect the Fed to cut rates anytime soon. That news is going to cast a dark cloud over the market for those who are simply focused on what the Fed is going to do. But if we look at the type of environment that is market friendly, good for the market, we want strong economic growth. We want strong employment. The fact that people are making more money is actually a good thing because they're going to spend more money. And that is good for corporate profits. And we don't have any credit issues. So all of those things are good for the market. Any pullback that we had on a hawkish Fed, I viewed as a buying opportunity. But I was still not out there aggressively buying because we had to get through all of this news. We had to see to what degree profit taking would set in. What was minimal lasted a day, and now we're making a new high. So where do we go from here, and how do we trade this? So got to look at both sides of the coin. I feel that the market is a little bit ahead of itself right now. And if I take a look at the different sectors that are rallying, it paints a little bit of a different picture because this looks gangbuster good. If you take the top 10 stocks in the S&P 500, that's where all of the gains are coming from. But the rest of the market has been a bit sluggish. And so the backdrop globally is not very strong. And I've referenced this. Europe had 0% GDP growth when they reported their fourth quarter. And that comes on top of a minus zero point 0.1 Q3 decrease in GDP. So they're almost in a recession. China is having issues as far as their property developers, their consumption is starting to decline. So all is not well in China either. The US has been the best game in town. I think that our market is also benefiting from those foreign investments. If we take a look at the ETFs, and I'm going to go in and bring up sector ETFs, and we are going to just flip through some of these charts to see where the strength is coming from. Which of these sectors are leading the way? Where do I want to be, and how broad-based is this rally? Well, if I look at XLB, and these are the 11 sectors, I'm just going to flip through them. I'm not seeing a lot of strength there. Not seeing a lot of strength there. Okay, this is really nice. This is XLF. These are the financials. And if you think about how banks are going to fare in this environment, higher for longer, as far as interest rates, fantastic. People have jobs, fantastic. That means that they're going to be borrowing money and they're going to be paying back those loans. That's a good backdrop for financials. And we've been long financials for the last 3 months. I still like the financials a lot. And we have bank earnings behind us as well. XLI. Okay, that's pretty decent. Yeah, that's industrial. So industrials are catching a little bit of a bid, but are they fueling this rally higher? Not really. And I don't think you're going to see a big move in industrials until China starts to recover. XLK. Okay, that's the technology ETF. Yeah, that's nice. And we know technology stocks have been strong. XLP. As I go through this, these are consumer staples. Okay, a little bit of a breakout, but certainly not fueling much of this market rally. When I go through all the different sectors, as I'm doing right now, nah. The last couple, nah. XLV, you'll see there's just not a lot of strength outside of the major tech companies. So, very, very concentrated rally. We want to be long technology. I mean, that's what this is all telling me. So you've got a market that's been super strong. Every indication is that the market's going to continue to move higher. Technology has been leading the way. We've got a lot of other sectors that are laggards right now. So let's stick with technology. Let's run some searches. Let's find stocks. Let's be fairly passive at this stage because we still need to see follow through. Breakouts are nice. We need to have follow through, and that was a big round of news. The other thing that I'll mention is that forward PE on QQQ is at around 31. That's lofty. That is high on a historical basis. So we've got to be a little bit cautious with that. Oftentimes, what you'll see is you'll get a rally after the mega cap tech earnings and they shoot higher, just like they have. And then what happens? Well, we've already discussed what happens. Those gains have to be digested. So let's put up the QQQ. And you can see on QQQ, we've got this nice breakout here to a new high. But you can also see this big run up here and this pullback took a while for QQQ to be able to digest those gains. So where the SPY was marching higher last week, QQQ was not. It was actually pulling back just a little bit. And this rally on Friday after mega cap tech earnings didn't quite get back to that high. So I suspect that short sellers are going to be a little bit more aggressive. Profit takers are going to be a little bit more aggressive now that those mega cap tech earnings are out of the way. The air gets let out of the balloon. You start to see more supply. That supply has to get worked off. It's going to take time. And that's what we want from the market as well. I had just mentioned to you on a 5-minute basis why we don't want big blow off rallies on a 5-minute basis. The same concept applies to a D1 basis. As soon as you start going parabolic, you run the risk of having a big pullback. And so on those parabolic moves, that's when you have to take profits. What I'm concerned about and what I would at all means be avoiding is a gap up on Monday and a nice big gap up. So we're at 494.35. Let's say we gap up to maybe 497 or so, within striking distance of 500. Then I'd be watching for a gap reversal, and that gap reversal gains traction, and you end up with a long red candle off of a new all-time high that turns out to be a bearish engulfing candle. That would be a sign that there's plenty of supply, there's plenty of selling pressure, there's plenty of resistance. Does that mean short? No, it does not mean short. It means that we need to start watching for a topping kind of price action in here with mixed overlapping candles. And then if that starts to roll over a little bit, we'll get a dip that might last a week, a dip that might last 2 weeks. So none of this one-day thing, but just a little dip that gives us an opportunity to evaluate stocks, and then the market will continue its next leg higher. So this is nice, gradual price movement. We want this float higher to continue. We want to see a VWAP-Q preserved. We'd like to see this breakout at 480 preserved. I don't think we'll go anywhere near that level. In fact, I think that the low from Wednesday, which was about 482.90, let's call it, 483, I think that's a level to watch. I don't think we're going to quite get back to that if we do get a little bit of a dip. So yeah, earnings season starting to wind down, economic calendar starting to wind down. We don't have a tremendous amount of growth in Europe. China's a problem. Valuations are relatively high. I am not bearish. I am a dip buyer. So give me a dang dip. That's what I was really hoping for last week, was that selling on Wednesday would have a little bit of follow through on Thursday and maybe even Friday. And if that would have played out and we had this pullback above AVWAP-Q, I would have been much more bullish heading into this week. And I said, yeah, okay, we're going to compress, confirm support, and then stage the next leg higher. Well, didn't happen. Had those earnings, big reactions, and a big move higher. So, gosh, that was a mouthful, wasn't it? Pete's bullish, but that's kind of how I am right now. I like the market. I like what I see. I want to be in long-only mode, but I'd love to see that dip. And until I get that dip, I can be watching for opportunities to sell out of the money, bullish put spreads on strong stocks. So that's one strategy. And I can also go back and take a look at companies that have recently announced earnings and that have gone through the process that I'm speaking of right now. And what is that process? That process is a really nice gap up after earnings. And this is something that all of you need to be able to do. So you sit down and you do your market analysis. So let's just take a deep breath, okay? Think about all the information that's out there. Got a really nice market rally. We had really good news. In fact, when I look at the Fed statement, they said higher for longer. I believe the Fed was going to be there anyway, even without the jobs report on Friday, even without the 0.6% increase in hourly wages. I still think the Fed was going to hold off. They had no reason to cut. The economy is doing great. There are no credit issues. Why would they cut? They got inflation wrong before. They don't want to make that mistake again. So as far as the crowd who is looking for a rate cut and looking for a rate cut, well, they were wrong. They're not going to get one. And Fortunately, the market rallied on Friday because it was really good news that everybody has jobs and they're making more money. So overall, everything still looks good for our market. Prices are a little lofty as far as valuations. We don't really have the overseas strength. So that tells me that we don't have to rush into the market right here. We've got all this major news behind us. Let's make sure that all of those gains are preserved. If we gap up Monday, let's be very, very, very aware that we do not want to see a gap higher that reverses into the gap in the first 30 minutes with long red candles. That would be a warning sign, and we could get that gap reversal on Monday that results in a long red candle. The most challenging part of this rally is going to be on a gap up. Now let me talk about that price action just a little bit. We don't have to worry about a gap down, okay? A gap down in a strong trending market like this is our friend. When support is eventually established, that gives us a great entry point for longs. And while we have that pullback in the first half an hour or hour of the day, we can evaluate stocks and we can find relative strength. We can find the real McCoys because the market's pulling back. But these stocks are ticking higher. We know buyers are lined up there. Gaps down are our friend. We embrace them. We love them. Even if you're long on a swing basis, embrace those pullbacks. What you have to be very careful of is a gap up. That's when you have to be cautious. That's when danger strikes. I know it doesn't make sense because you're thinking, I want a gap up. Then all my positions are going to be higher and I'm going to feel good. You're going to feel good, but when you get that gap reversal, 45 minutes later, you're going to be wishing that you had sold your long positions on the open, because on those gap reversals, that's when the selling pressure can accelerate. That's when the momentum accelerates. You fill the gap and you're thinking, okay, well, we filled the gap. Now we're going to bounce and try and get back to the high of the day. And it never comes because the sell programs kick in, profit taking kicks in, bullish speculators who have been buying up here, they get flushed out of positions, and that's how you end with one of those long red candles. Let's see if we can find something like that. You know, a gap up to a new high and the market closes on its low of the day. That is a gap reversal at a new relative high. Perfect example. Gap reversal. Float higher. Everything looks great. Oh man, we're going to the moon. Ah, look at this. I got my gap up. Oh my God, look at my P&L. An hour later, you're going, ooh, ouch. Now you're probably going to be taking some of your profits. By the end of the day, you're like, oh, whoa, that was a nasty round of selling. And then the next couple of days, you can't get back to that high. Whoosh. Be very, very, very careful with this pattern this week. Watch for it. I'm telling you that right now. And I think there's a possibility that we're going to see it. So we want this, however long this move is, and this was earlier this year, so this is back in July, and then we had the pullback through September and October. So this is the start of a longer term move. But in here, what you wanted to do, and you didn't want a pullback that was this deep, I'd mentioned to you, a pullback about like this would be fine. And we stay above AVWAP-Q, and then we start grinding higher, and we easily get back to the high. Boom, boom, boom. So this is our entry point. And so when you have a dip that's brief and shallow, and you start seeing support, price action that tells you that the market's going to go higher, a nice long bullish engulfing candle in here with another green candle. Okay, everything's intact. We did not see that here. So that tells you, ooh, that's a pretty big drop. Now I have to be watching for more selling pressure and a lower high double top. So I don't believe we're going to see that. I want this nice brief little pullback, and then I want to start grinding back to the high. That would be an excellent entry point for us, so watch for that AVWAP to be preserved. So during the course of the next week, be very careful of any big gaps up. You need to see them hold. What we'd be looking for is sideways compression. Let's hold these gains and let's move higher. So let's find stocks that have recently announced earnings that might set up well for us. And I'm going to go in and conduct a pretty easy search here that all of you can run. I'd mentioned to you earlier, I'm going to take this off because I'd mentioned to you earlier that you have to know what you're looking for in the market. So as I start visualizing what is that chart pattern that I would be most inclined to trade right now. I've got a market that's run higher. I've got good economic news behind me. Everything feels pretty fluffy in here. It feels like the market's getting a little bit ahead of itself. I'm not seeing a lot of sector rotation outside of technology. A little bit in financials, they look pretty good. Healthcare is pretty mixed, but that's about the extent of the entire rally. Top 10 stocks in the S&P 500 are really accounting for all the move. Okay, so I'm not super excited about getting long the market right here. So if I've got the right stock, I'm okay getting long. So what would that right stock look like? Is it the one that's stacking long green candles right now and breaking out to a new high? Depending. If that move has started to go parabolic, I know that getting long in there, I've got a chance of a reversal off of that high because the stock has gotten ahead of itself. So no, I'm not really looking for that. Well, I'm looking for laggards that really haven't participated in the rally yet. No, I'm not really looking for that either. What I'd like to have is a company that has recently announced earnings. Okay? Gap up. Okay? And it's had time to digest those earnings. The bid is starting to strengthen, but the stock has not run higher in the last couple of weeks. It has not gone parabolic. So I can feel confident in that bid, and Netflix was a good example. In fact, I'm going to show you a search that I ran, and these are the criteria. So do I want a stock with relative strength to the market? Heck, yes. Now I'm looking for a compression on an H1 basis. Okay, I'd like to have good option liquidity. All right, that makes sense. So why do I want that compression? Well, I want to make sure that the stock has been able to hold recent gains and it's still got its relative strength. And here's the kicker. Earnings date previous. Show me a stock that has announced earnings in the last 20 days. So as I start flipping through charts, I know it's announced recently. I want to see that gap up and I want to see that compression on an H1 basis as the stock holds those gains and as the bid strengthens. Why am I not using H2 or D1? I could. I absolutely could. I'm hoping that I can find H1 compressions, and anything that's in a D1 compression is probably going to have an H1 compression. So for the heck of it, let's use D1 and see how many stocks show up. A D1 compression is going to mean that the stock is a little bit more, it's taken a longer time for the stock to break out, which is fine. And you can see VZ, Verizon, hugging AVWAP-E, beautiful gap up. There's our compression right now on a D1 basis. Good relative strength, LRSI above 80. Yeah, I like Verizon. I don't feel like I'm chasing here. And you can see that long red candle on Wednesday. What did the stock do? Tried to make it to a new high, but it pulled back. It still finished up for the day. Yeah, this is nice compression in here. So I think Verizon is going to be an excellent stock to get long. What would I do with that information? GTC, click on the high from Friday. Now I have a GTC alert line. If it starts to get through this compression, I'm going to know about it. If it takes out the high from Wednesday, I'm going to have another alert line there. It goes vertical until there's another data point. So this is going to be a horizontal line there. So let's go back into our search and take a look at what happens when we go into an H1 basis and see which stocks are coming up. These are the stocks that I'm going to be looking at, and I'm just going to flip through these charts. Look, there's not a lot of them. There's only 7 stocks or so, and I already know the pattern that I'm looking for because I had visualized it mentally. Stock has gapped up on earnings, and now it's compressing. ASML, big gap up right here. Yes, even floating a little bit higher, but able to hold that AVWAP-E. Yes, this is a decent candidate for me. Could I sell an out-of-the-money bullish put spread? Based on the price action this week, I still want to see another day or two of these gains hold. And in particular, I'm very interested in what happens on a gap up because I think it's going to be faded. And I think you're going to get a gap reversal if we see that candle. So no, I wouldn't be overly aggressive, but I would definitely be watching this. And if I get the market marching higher, trying to sell an out-of-the-money bullish put spread, especially if I can get down to that 825 level, yeah, that would be attractive to me if I can get a decent credit there. BSX, nice gap up stock continuing to add here, but you can see the stock has been relatively choppy in the past. Yeah, I like this gap. I like the price action. So I'd like to see this stock put in a little bit more time, hold those gains. So far, so good. Didn't do very well Friday. Had a little bit of a pullback, but not bad. IBM. This is going to be your pick. I love IBM. I love the fact that we've had this gap up. I love the strength that we saw in IBM recently. You could see the big gap up after earnings, so it was very well received. How do I play this? What can I do? Well, I can set an alert based on AVWAP-E. I can also just pick that horizontal price point right here, and I can click on that, and now I have an alert. Yeah, IBM, your trade of the day, and here's how we play it. Could I sell an out-of-the-money bullish put spread right now on IBM? Given what I think the market could do and looking for some signs of weakness and a little bit of selling pressure in here, I would prefer not to sell one until I see another day or two of market action. But yes, I would be trying to sell below that 180 strike. It's not too far away. So a few weeks out, and go to the Feb 23rd and take a look at the 180. Yeah, you're not going to get much for the 180, 175. 2 weeks out, you're only looking at getting maybe a 65-cent credit. I'd need to get $1 for that. If I went out one more expiration cycle to the March 1st expiration, there could I get the credit I'm looking for the 180, 175. There you're looking at, let's reset that, 180, 175. You're still looking 71 cents bid offered at 94. Not quite there yet. So ideally, get a little bit of a market pullback. We get the stock holding its own. Then I would even get more aggressive with it. Meaning, I could go, if this particular price point holds, then I would be more inclined to get that bullish put spread done. If I see market pullback, okay, and the stock holds this gap, then I'm more interested in getting long IBM. I can just wait for this upside alert to be broken, and if it is, and I've got decent market strength, then I can just get long IBM. It's had a decent amount of time to compress. You can see the long red candle on Wednesday, long red candle here. So yes, it's got some sensitivity to what the overall market is doing, but a lot of tech stocks took kind of a beating in here on Wednesday. It held up relatively well and preserved most of this gap. So I really like IBM. I'm just waiting for a good entry point on it. Merck, take a look at that. You can see this is a nice compression in here, but the stock is moving higher. See the compression and moving higher. This is a very powerful pattern. Yeah, I like that. Fairly choppy stock that doesn't move very quickly. So Merck, you got to be a little bit more careful with. Netflix was the next one on the list. We've already taken a look at that. NVO, I like this breakout above the 108 level. You can see how the stock has been able to hold that gap. I'd like to get a few more days under our belt. So this is a search that all of you can run in Option Stalker Pro. Relatively easy. We've got relative strength versus the market. We've got compression in on an hourly basis. We have earnings release behind us, and we've got decent option liquidity. Piece of cake. So those are some really nice picks. Final recap on the market. We've got a light news week, so there's not a lot to really drive the market. I feel that with mega cap tech earnings behind us, some of the air could get let out of the balloon. Some of the excitement that we saw on Friday could start to wane this week. I believe that profit takers and shorts are going to be just a little more aggressive because they don't have those mega cap tech earnings ahead of them. So yeah, I'm looking for price action to kind of stabilize in here, consolidate some of these gains, digest some of these gains, get a little bit of sideways movement. The big concern that you should be watching for is do not chase any gaps up. Those are very likely to reverse. And if you get a gap up that has some follow through to it that looks like it's going to be a gap and go formation, that is where FOMO Joe is going to be buying everything in sight because he sees a new all-time high and this is going to be a gangbuster move higher, so I got to buy and buy early. And so he gets in the first half an hour and then he gets the door slammed in his face. So don't do that. Don't be that guy. Wait patiently to see if that gap up holds. I suspect we're going to see some profit taking on it. Our best scenario this week is gap down, gap down, gap down. We want to see a gap down that is preserved. We want to see that support. We want to see that buyers are still in there. They're still interested. And then as soon as that support is formed, we've got a chance to buy stocks with relative strength. We're able to evaluate those stocks during that market pullback early in the day. And then we know we've got the real McCoy and a good trading opportunity. So that's the pattern I'm going to be watching for. Thanks so much for attending this morning. I know I got a little long-winded, but there's a lot going on in the market right now. Make sure to watch for those Wednesday live events because then we're able to answer your questions and take a look at what's actually happening in the market during the event itself. Good luck with your trading. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.